Our next guest says passage of the CHIPS Act could be the jumpstart that the industry needs, and it's got him feeling bullish. Joining me now is Mark Smith. He's the Senior Vice President and Portfolio Manager at Wells Fargo Advisors. And Mark, I like your perspective on this because you're not an Intel analyst or someone who's been following this or rooting for the space even to succeed. So why do you think this is so significant and positive for the whole sector?
Well, it starts with a B, $52 billion over the next 5 years is be going from the feds to this specific sector. That's an unprecedented investment in the semiconductor space. And so you've got to be bullish if that amount of money is flowing in. And I got to tell you, Kelly, a lot of this has to be R&D. When you've got 90% of the neon used for chips in Ukraine, and when you've got Krypton being the largest exporter from Ukraine that helps the gases that make the chips, you've got a problem. So you've got to get in there and redesign these chips with stuff that we can, source here at home or somewhere else that's safer in the world. And you're going to need every bit of that $52 billion. So I'm bullish because of the amount of investment that's being made bipartisan on this side in regards to chips and how much money can flow in there. And then you've got to look at the demand, right? Because if you have enough product, it doesn't matter if people aren't buying it. I just played golf, and I had a microchip in the golf ball. So this is just going to keep going. And these chips are going to be needed more and more for cars and everything else we use in this new modern age.
Yeah, I mean, I take your point. I suppose maybe I'm too cynical. Look, I don't want to depend on other countries for something so important. I just worry this is going to be a ton of wasted money, and that it would be better to let the Intels and the other American, to encourage, incentivize, maybe, push them in that direction, tax breaks, whatever it takes. But this is just a lot of money to throw at this, and I'm not sure if there's a clear precedent for it working all that successfully.
Well, China, Taiwan, they're doing the exact same thing, but they've been doing it for decades. They've been subsidizing major companies over there, and we have allowed private industry and private investors to do that here. Now the U.S. is saying, listen, we got to two can play this game. We can put some money behind our chips and our semis and be one of the largest producers of semiconductors in the world. Maybe not tomorrow, Kelly, but definitely the next 5 to 10 years if we really put on our thinking caps and use all this money the right way.
So one of the pitches that the president is making is that this is beyond just the semiconductor industry. Is this the kind of thing, they pass the CHIPS Act, you start feeling more bullish about the whole market and the whole economy?
I'm feeling bullish about the chips because of the fact that they're down so much. I mean, look at the charts on the SMH or the major U.S. semiconductors. They're down big, and I'm a value investor. And so, and just like Mr. Buffett, he's buying them too. So I think anyone who's a long-term investor, you got to see if a sector's down 50% and you want some, time to start dollar cost averaging in. I'm not saying, load up the shelves here and put everything on today, but I'm saying you should start dollar cost averaging in if you're a long-term investor. This is your retirement money. This is money you're not going to use for 20, 30 years. You're going to look back and see that this was a great buying opportunity, I think. And if it goes lower, buy some more.
Shepard Smith here. Thanks for watching CNBC on YouTube.